Good morning to all traders and welcome to another daily market insights video provided to you by Orbex. Today is Wednesday, the June 19th, and it is an interesting day indeed because we have the FOMC at the end of this, near the end of this session. Now, gold bulls are taking a breather, seems to be taking a breather from the multi-month highs, and while markets await for this event, of course. Now, question is, will gold move higher and break to fresh highs on the back of rising risks of a recession and also, of course, the US deficit? Or will it be Powell, that the Fed chair, that is going to send a calming tone to the markets at today's event? We're going to find out in a few hours, obviously. Now, oil, on the other hand, seems to be forming a deeper correction after the rise that we saw yesterday, following in some sort of new sentiment that there will be oil disruptions due to increased tension in the Middle East, and also in hopes that the US and China talks will resume, and that follows a hopeful tweet Mr. Trump posted about his phone conversation with President Xi. That was pretty much very, very productive. Now, on the calendar, we have German PPI and the CPI in the UK, as well as Canada. ECB President Draghi speech, which will be an interesting event to watch what he's going to talk about. He was dovish the other day. EIA crude oil stocks for the week ending 14th of June, and then, of course, FOMC press conference and decision. Now, going to our charts, we have interesting things to talk about today. We're expecting prices to move under these sort of terms. Okay, actually, we're expecting prices to finish the impulse up here. Now, that could be the case still, but because this seems to be forming as a triangle with the last move down here, there is possibilities that we are going to see a last wave E to the upside around 1366 to complete wave 5, and then we'll start looking for the correction down around 1320. Okay, supporting signals both on RSI and MACD, and we have on the shorter term the RSI supporting a move to the upside. Now, of course, there is another scenario, and that doesn't turn out to be a triangle. That means that we are going to move our wave 5. That's going to be the end of it over here, and then now we are actually moving on the downside, and we've just finished the C of the ABC correction to the upside, and we're probably looking for another impulse to the downside. That is going to go around 1320 or even lower. If we go down on the 1 hour chart, I think we're going to see some more details. So I'm seeing this as an impulse to the downside with an ABC correction. So I'm expecting another impulse to the downside, okay, around 1320 or anywhere around 1320 and 1312, I would say. Okay, that's the 50 Fibonacci extension of this full wave to the upside. And the 1314 is a good level, is the extension of this first wave that goes around that level. But I wouldn't think prices will go anywhere below the 13 level, to be honest. If we see that breaking the 13, then we're really looking at prices to move lower and even create a fresh low, but that wouldn't be the chances of that happening are not as many. Okay, now on the oil, I also have two different scenarios here because market seems to be a bit mixed at the moment, waiting for FOMC, of course. As well as we'll have the Bank of England decision as well at some point this week, don't we? Anyway, on the oil, I was expecting this to be wave 3. That was wave 4, and I was expecting prices to break down to wave 5. That didn't happen. Prices now start moving higher. So that means that I'm moving my wave 4 over here, or it could be down here, okay? That's the truth. And I'm calling this an ABC correction. And now we are expecting prices to indeed move a little bit higher, okay? Now, prices could go up to 55, up to 57, or even up to around 60, okay? And of course, that is going to be determined by different factors. If we go on a different chart, you will see what these factors are. Now, I see this as an ABC, okay, but it's also an impulse in the shorter term. time frame, right? After breaking that level, we're now looking at completing wave 3 and then wave 4. So we could be looking at going to 56 for wave 3 and then 57 or 58 or anywhere between 57 and 60, to be honest, to complete wave, the last wave of the impulse. Now, don't forget also that we might see as well a duplication of this first wave, okay? And that would take prices to around 55, yeah, around 58 or so, okay? Now, I'm still in the medium term waiting for prices to either start falling here on that level or over here. I'm still waiting for this downside impulse wave to complete, and I am also on a corrective wave over here, okay? So this is this could turn out a WXY, and actually that 3-4 that could also be a WXY down here. So I'm expecting wave 5 and W to be completed as well in the medium term. Now on the next chart I have a different scenario here, and this would be the case where we're not going to go above the 55 level, okay? That would be if that turns out to be a triangle. So we have A, B, C, D, E, okay, with this being a throwback. And the throwback obviously cannot go above that level. So if that was the case, and this is a triangle, then we're looking at wave 4, you know, moving some sort of same level as this wave A, corrective wave A, and then prices move all the way down for, you know, for 50, and then even lower levels. RSI and MACD show us some signals here that are bearish, but that could simply be a correction to be wave 3, and then we'll have a wave 5 to the upside. But to be honest, I'm looking this at getting to at least 57 in the short term. So that would be it for the day, to be honest. So I will pay attention to EIA, ECB's Draghi speech today, and FOMC later in the night. Thank you for being with us for another day. If you like our video, of course, hit the like button. I would recommend, as always, keep an eye on our blog, is where we cover the latest news, published trading ideas, and provide all the necessary tools a trader needs.